This class will be concerned with sales strategy and setting sales objectives. We'll start marketing departments and by sales departments. And the idea of using these techniques is to try to generate sales for the business. It's important that the business has sales and has a sales revenue, otherwise the business would not exist. So it's important to develop the market and to try and get the market to grow, to sell more products and services over time, so as to enable the business to grow and to prosper. Now the sales team can use a range of selling strategies to try and generate market growth. It could use different promotion techniques, for example, or advertising, or customer relations management, contacting customers and building up relationships with the customers about the product, and having sales drives. And there are many techniques that may be used in order to try and promote the product in the market and thereby, of course, promote the business. Setting sales objectives are important, and strategies can be derived from the objectives. So once the objective is set, the objective is to grow the market, to sell more over a period of time, then the strategy will follow. How should that objective be met? What is the most appropriate strategy to have more salespeople on the ground, more salespeople in the field dealing with customers, or is it to have more above the line marketing in the press, on television, or whatever? It depends on the product, it depends on the price of the product, it depends on the market and the characteristics of the market. But the strategies have to be determined once the sales objective has been set. So the first point is setting the objectives. What are the sales objectives? So there are corporate objectives. These are the widest possible set of objectives that must be met. And the corporate objectives will be met by corporate strategy, needless to say. So the business has corporate objectives of growing by X% in the next 5 years or in the next 10 years or whatever it is. And they will pick strategies to deal with that. For example, more marketing personnel, product innovation, research and development, or whatever it is. And then we've got marketing objectives which flow from the corporate strategy. So the marketing objectives will be trying to live out or achieve the strategy. The strategy is to engage in more marketing in a certain area, and the marketing objectives will put meat to that. It will say, well, the company must grow by X% in that area, or it must grow by Y% in a different area, whatever. So the marketing objectives, again, are derived from the corporate strategy. And of course, having got market objectives, there will be market strategy. The market strategy is to employ more people in the field, as I said earlier, to have more advertising or more promotions, or it depends on the product. As I said earlier, it depends on the nature of the product. If the product is a large capital piece of equipment, then advertising it in glossy magazines may not be the answer, or advertising it on television may not be the answer. It may be promoting it in trade shows or promoting it directly to the customers. So it depends on the nature of the product. But the marketing strategy should come from the objectives, the marketing objectives, which of course comes from the corporate strategy, which comes from the corporate objectives. And the marketing strategy, of course, will have the detailed sales objectives. Perhaps the sales objectives will be broken down by area, or broken down by customer, or broken down by characteristics in the market in some way. So there will be sales objectives and a sales strategy. How will different parts of the market be approached? The market may be segmented. The market may be males and females, or people over 65, under 65, under 50, under 30, or whatever it is. So there will be a sales strategy aimed at these particular segments, and that will feed into the sales objective to try and meet the overall objectives, which tries to meet the marketing strategy, fits in with the marketing strategy I should say, which meets the marketing objective, which of course is derived from the corporate strategy, which meets the corporate objective. So we can see the evolution of the sales strategy. It comes all the way from the top of the organization. Now, setting the objectives. Well, objectives are set at various levels in the organization, and as you've seen from the previous slide, they cascade throughout the organization. They have a common theme coming all the way back from corporate objectives. The corporate objectives being to grow the business, let's say, or to consolidate the business, or to enter a new market, or whatever it was. So you could see how it cascades down to the detailed sales plan for a particular area, for a particular set of customers. Corporate objectives are the ultimate goals and objectives set by the business. So the corporate objectives is what the business is trying to do overall. And all the other objectives, such as functional objectives, are derived in order to meet the corporate, or derived I should say, to meet the corporate objective. So the corporate objective is what the business is trying to do. That's the big long-term ambition of the business. Everything else feeds into that to try and help to achieve it. Functional objectives are set by departments such as marketing and finance, production and human resources. So each of the departments in the business will have their own objectives, but these objectives contribute towards the overall achievement of the corporate objective, which is what the business is trying to achieve overall. So the marketing section will have objectives, it'll have strategies, the finance will have objectives, the production people will have objectives, and so on. But it all aims at achieving the corporate objective. So setting the objectives, well, we have corporate objectives, and then we've got the various functional departments. I've just listed 4 here, there might be many more, depends. But we have the various functional areas, and these functional areas are contributing towards the corporate objective. Marketing objectives, for example, could be to increase revenue, or to increase market share, or to increase market growth. So it's contributing in trying to achieve this objective, it's contributing towards the corporate objective. And marketing will have, well, here I've got the 4 P's: product, place, price, promotion. There may be more than 4 P's, there may be other areas that the marketing people want to look into. Particular types of marketing in particular circumstances. Depends on the product, depends on the nature of the market. But we can see from the diagram that everything is feeding back to the corporate objectives. That's the point. Now, so there are objectives for each element of the mix, and the objectives include customer awareness, increased sales volume and customer satisfaction. And the upshot of all of this are sales. I've actually just listed sales here against promotion, but in fact all of the elements of the marketing mix contribute towards greater sales or greater impact in the market. And the important point is, going back upwards on the diagram, it all feeds back up through the various elements of the marketing mix, up into marketing and back into the corporate objective, which is trying to be achieved. Now, sales objective and sales strategies. Well, the marketing department or marketing departments are responsible for setting sales objectives and from the objectives, sales strategies are derived. So the marketing department sets the sales objectives, and from the objectives, the sales strategies are derived. So we start with the objectives. What are we trying to do? What's the marketing department trying to achieve? What are the objectives? Having a clear picture of what the objectives are, it then derives strategies to try to achieve those objectives. Sales strategies are planned approaches that are developed to meet marketing objectives, and of course thereby help to achieve the corporate objectives. So sales strategies are detailed strategies relating to the market, relating to how the product is positioned in the market, and relating to the marketing mix as applied to the product. And it's a very detailed, perhaps, approach to looking at the market. It's looking at all aspects of the market. And it fits in with the sales strategy. The sales strategy is to go into the market and capture the market by dealing with changes in price or having promotions, or go into the market looking at customer relations and trying to build up a knowledge of the customers and build up relationships and promote the image of the product, whatever it is. So there are strategies there, but the strategies ultimately feed back to the achievement of the corporate objective, like I've said many times earlier. Strategies must be developed in line with corporate objectives. Of course, needless to say, everyone should be pulling in the same direction. So the marketing department should be working in a way that enables them to fulfill or help to contribute towards the achievement of the corporate objectives. The corporate objectives being what the business is trying to achieve. So all of the functional areas should be pulling towards the achievement of the corporate objective. Otherwise there will be inefficiencies, mismatches, conflict, and it will not be a very harmonious business. The sales objective and sales strategies. Well, sales strategies involve improved customer loyalty. That's always a good sales strategy. Expand and increase market share through product modification and gain competitive advantage. Modifying the product in line with customer needs is always a good idea. It means knowing what the customer needs are, so there has to be some market research, some feedback from the market, from the customers, about what they would like to see in the product in terms of its design, its functionality, its reliability, or whatever. So trying to meet that is always a good idea, because that enables more sales to take place. And increasing customer awareness about the product. Just having events in trade shows, or having events in stores, or advertising the product on television. It's expensive, but it may get the name across. It may make customers aware that the product exists. And try to approach new customers and attract new customers. So it may need marketing and salespeople in the field who will make direct contact with customer groups to try and make them aware of the product, its quality, its attributes, and its desirability. And try to expand into new markets. That's how growth is most easily facilitated. Growing existing markets may be difficult. People have enough of the product. And new sales will be perhaps just marginal, just on top of what already exists. But entering a new market, that may be very lucrative, because the people there will be first-time buyers, perhaps, and there will be more opportunities for sales. Continued emphasis on sales growth is important, because the sales team know what the objective is. They know that they need to continue to grow. So there's no complacency in the team. There's no complacency within the organization. And there is an emphasis on growth. And that, as a sales strategy, enables the business to move forward, because the sales team know what the overarching requirement is: to have extra sales, more sales. But it's important also to have customer satisfaction ratings, to try and get feedback from the customers about how the product fares, how the product meets their requirements, and addressing any shortfalls. Making the customers feel part, perhaps, of the experience. They have bought a product, they're experiencing the product, and make them feel that they're not alone, that the organization is still somewhere to be spoken to, communicated with, and if there are issues, there's good backup support, after sales service support perhaps, that can help them with the product. There's one of the books that I've relied heavily on in deriving this session, and that's all I'm going to